Good evening and welcome to Biz in Focus. You're with me, Amavi Banagoda, taking a look at some business developments during the week. The central bank in its third monetary review reduced the standing deposit facility rate and the standing lending facility rate of the central bank by 50 basis points to 7.50% and 8.50% respectively.
Monetary Policy Review number 3 of 2019 decided to reduce policy interest rates by 50 basis points while maintaining the statutory reserve ratio at the current level. Accordingly, the standing deposit facility rate has been reduced to 7.50%. The standing lending facility rate is at 8.50%, and the statutory reserve ratio remains unchanged at 5%. Members of the Monetary Board considered some key factors in arriving at this decision. These included both domestic and international developments in the current period and in the foreseeable future. So let me now briefly take you through the factors that were considered by the members in arriving at this decision. With regard to global factors, a dovish approach to monetary policy is observed globally. The Fed is to continue a more dovish monetary policy, and the European Central Bank is expected to maintain key interest rates at their present levels. Several emerging market economies have signaled some relaxation. The RBI reduced its benchmark policy rate to support growth. The Central Bank of the Philippines cut its policy rate to 4.5% in May 2019. Bank Negara Malaysia also reduced its policy rates to 3%. However, the State Bank of Pakistan raised its target policy rate to 12.25% in May 2019 due to exchange rate and inflationary pressures. Domestically, low economic growth is likely to be further affected by the Easter Sunday attacks, although it is premature to conduct a comprehensive revision to the medium-term macroeconomic framework, which was published in our annual report 2018. The following variables are likely to be affected by the Easter Sunday attacks. Tourist arrivals and earnings will be lower than projected. The negative spillover effects could be felt on related subsectors, such as hotels and restaurants, transportation, entertainment and hospitality, food and beverages, trading and financial services. Accordingly, real GDP growth will be lower than projected. The current account deficit could be higher than projected. The fiscal deficit could be higher than projected, although expenditure switching could dampen the effect on the budget. It is expected that earnings from tourism would rebound with improved security conditions, relaxation of travel advisories, promotional campaigns, and recently introduced policy measures to revive the sector. A threat to the inflation outlook is not anticipated for the medium term. Headline inflation based on CCPI on a year-on-year basis accelerated to 4.5% in April from 4.3% in March. Headline inflation based on NCPI on a year-on-year basis also accelerated to 3.6% in April from 2.9% in the previous month. However, core inflation based on CCPI on a year-on-year basis decelerated marginally to 5.5% in April from 5.6% in March, and core inflation based on NCPI on a year-on-year basis accelerated to 6.3% in April from 5.8% in the previous month. Inflation is likely to remain in the desired 4 to 6% range in 2019 and beyond.
Meanwhile, addressing the gathering during a media briefing at the central bank, Governor Dr. Indrajit Coomaraswamy said the April 21st attacks will impact the growth projections for the year 2019.
Now, turning to the domestic factors, we've had an output gap now for several quarters. As I've said before, the potential growth rate for the Sri Lankan economy calculated by the central bank is 5%. We went down to 3.2% last year. Now, when we met last in April, we had projected growth for this year at 4%. Now, after the events of recent weeks, that figure is likely to be revised downwards. We've seen private sector credit slow down significantly. In the first quarter, as Dr. Indraratne pointed out, there was a net repayment of 14 billion. But all in all, we've seen credit growth get reduced significantly. Private sector credit was down to 9.9%. In addition, broad money, M2B, she told you, had come down to 9%. Clearly, there will be pressure to increase expenditure for compensation payments, for support to the affected sectors. At the same time, on the revenue front, VAT, corporate and income taxes, customs duty, all those are likely to be affected. So the government is reviewing its whole budget. It plans to reprioritize and to accommodate both the increases in expenditure and the reductions in revenue as much as possible within the broad framework that it set out. There's been some capital outflows. I think on a net basis about $77 million this year. But last year we had outflows of about $1 billion. So this year really, given the circumstances, again, there has been a fair amount of stability. As far as our reserves are concerned, on the 18th of April, we projected that our reserves at the end of this year would be 8.2 billion. So if one looks at a worst case scenario, tourism, which was expected to bring in $5 billion this year, the latest projection is that it would bring in about 3.7 billion. So there's a loss of 1.3 billion. But the tourism sector has about a 30% import component. So the net loss of tourism receipts would be roughly, say, these are all kind of, just a worst case scenario. These are numbers I'm sharing with you. There is no sound basis, but just to give you an idea of what would happen if things were as bad as they could be. So another area where there could be losses is the foreign institutional investment in the rupee-denominated government securities market. There's been only a net 77 million outflow, but let's assume there's a 300 million outflow in the worst case scenario. I'm confident it won't happen, but let's just say so. Then the other area where we could have a lower inflow than anticipated is foreign direct investment. The number at the beginning of the year was $2.7 billion. Let's assume that number comes out 700 million less, because you must remember that the flows of foreign investment this year, almost all of it would be on contractual arrangements made earlier, before the 18th of April. For the money to flow in this year, the deals would have to have been signed earlier. So so there is a pipeline which will come through. Of course, next year's number might get affected. So 900 million tourism, 300 million foreign institutional investment, and say 700 million of foreign direct investment. You add all that up, it comes to 1.9 billion. And as I said, we projected reserves at 8.2 billion. You take 1.9 billion off, you end up with about $6.3 billion as reserves that could be there at the end of the year under this worst case scenario. That 8.2 billion projection that we had for the reserves at the end of this year, assumed that we would raise $2 billion more from international markets. That the cabinet has just approved the raising of $1.5 billion as out of the government's cash flow requirement, which could be upsized up to $2.5 billion if the market conditions are appropriate. In addition to that, as of today, today the Treasury will certify the public debt number, certify the total outstanding public debt as of the 31st of December 2018. And that now opens up the opportunity to seek cabinet approval to raise money under the Active Liability Management Act. The Act permits the borrowing of up to 10% of the total debt stock outstanding at the end of the previous year. So that has now been certified. But I think approval will be sought by the Treasury to raise about the equivalent of 480 billion rupees. And the central bank and the Treasury together are looking at all options. It could be an dollar-denominated international sovereign bond. It could be a samurai bond, and for that there is a JB guarantee on offer. It could be a panda bond, or it could be a term loan. And for a term loan, there is this possibility of the World Bank providing us with a policy-based guarantee. That's an instrument the World Bank has, where in return for reforms undertaken by a government, they provide a guarantee for money that is borrowed from abroad. Now, as part of the World Bank's efforts to support the country after these events, they are giving credit for reforms we have already undertaken or are about to finish. That's the flexibility they are exhibiting. And there is a possibility, this is all still being negotiated, but there is a possibility that they will take on an exposure of $250 million, which can be leveraged 4 times over. That means that the government can go out and borrow up to about $1 billion on the back of the World Bank's AAA rating. So this is where the big benefit is. That money will be borrowed on the World Bank's AAA rating with the support of this policy-based guarantee rather than on our rating, which should bring about significant savings.
The Colombo International Logistics Conference, supported by the government and the Sri Lanka Logistics and Freight Forwarders Association, will take place on the 1st and 2nd of August this year.
This is part of the Foreign Ministry's economic diplomacy program. We had the 21st century diplomacy, as you all probably know, is focusing on economic diplomacy. As the world moves towards the international political economy, it's governed by the international political economy, we also geared towards it. Unfortunately, domestic situations prevented us from aggressively engaging in economic diplomacy. So over the past 10 years, we have done that. And especially last year, since the middle of last year, we actually operationalized this program formally, economic diplomacy program. So that actually consists of 3 components, where we identify targets that all our missions are assigned to deliver in terms of economic goals, whether it is tourism, whether it's exports, investments, and trade, so on and so forth. And the second component of that is the promotional exercises, how we arrive at those targets. And the third one being a very comprehensive training program for diplomats in a way where they interact with Sri Lanka, with our economic side of Sri Lanka. This year we plan to invite 65 such diplomats, decision makers, mid-level decision makers. They have actually come to Sri Lanka, witnessed firsthand what Sri Lanka has to offer. So that is the economic diplomacy program of the Foreign Ministry that partners with all of the line agencies, the tourism, shipping, exports, and obviously the private sector.
During the media briefing, Chairman of the Sri Lanka Tourism Development Authority, Kishu Gomes, made the following remarks.
We now have the month-end results for May, and if you compare May performance versus last year May, the decline is only 70%, right? 70%. So obviously, with safety being restored, we see the numbers slightly edging up. After April, we were anyway going in for the lean season. Last year, April, the figure was 180. From 180, it dropped to 129. And as opposed to that, this May was 37,000 tourists. So we have 7 travel advisories being softened. And let me share the list with you. These names have come from time to time, but here is the summary. Germany, India, Netherlands, Norway, Switzerland, Italy, and China. So as you know, China is the largest market, and we had 470 tourists visiting Sri Lanka from China. India is the second largest, and we had almost 270,000. There were initially about 30 travel advisories of different nature. It's not to say don't travel, but they've given various sort of explanations in that. But obviously, all these advisories discouraged people visiting Sri Lanka. From UK, we have had 3,200 tourists coming in. We've had 1,300 tourists coming from USA. And there are other markets where we have large numbers coming in, but those countries have not had travel advisories. Let me give you that list. Maldives, Bangladesh, no travel advisory. Philippines, Brazil, Cambodia, Maldives, Nepal, South Africa, Thailand. So just moving on, we received the cabinet note last Tuesday to appoint a PR agency and a global advertising agency. And for the PR effort that we will be having, covering all our target markets and beyond, investment is going to be 420 million rupees, not dollars. We are not so rich. But for the marketing campaign, for the next 6 months, we'll be spending $500 million rupees. Right? So both put together, from now till the end of the year, we will spend more than 900 million in order to create the right perception.
During a press briefing held at the central bank recently, Governor Dr. Indrajit Coomaraswamy said that the central bank and the government had implemented several measures to ensure that the EPF funds invested in the stock exchange will generate maximum benefits to its shareholders.
The EPF grows at the rate of 300 billion rupees a year, right? It's a 2 trillion fund, so there is 300 billion of investable resources. Now, the government's borrowing requirement is coming down. So, we have to find avenues for investing the EPF's funds. Clearly, the stock market is one such avenue. It is true there were some problems with that. So, we have had some internal inquiries. 2 of the forensic audits are into the operations of the EPF. So when these are completed, we would need to see what action has to be taken. Then, in terms of the processes and procedures, there is now an investment committee, an investment oversight committee, the deputy governor, 2 assistant governors, all of them have oversight over it. And the investment committee meets on a daily basis, so nobody can make decisions on their own. There can't be rogue traders operating. In addition, things like CCTV, voice recordings, all those things have been introduced so that we have a greater monitoring of what is going on in terms of investment activity. There is greater transparency because from now on the investment operations of the EPF, including the stock market operations, will be put on the EPF website on a quarterly basis. So everybody can see what has happened. Also, before investing, the EPF officers will put a paper up to the monetary board to get approval of the companies in which they're going to invest. Because you know in the past there were issues about unlisted companies, etc. So now there's a process whereby the companies within which the EPF will invest will get approved by the monetary board. So there are lots of checks and balances that have been put in. In addition, colleagues have done a lot of analysis and very cautiously we will go in. And one of the reasons we have gone in at this point, as I said, one is this 300 billion that is coming on stream every year and you have to find a way of investing it. The second thing is that the share market is extraordinarily undervalued at the moment. The best companies in the country are sometimes valued below the book value or at book value. So that's why it was considered that this is a good time to go into the market. But lots of things have been done to introduce checks and balances, to have scrupulous oversight. The other thing I should say is the risk management department of the central bank is drawing up the investment guidelines, right? Am I right in that? Of the EPF. So it's a different department that will be developing the guidelines. So we have done everything possible to make sure that the EPF's investments are done as professionally as possible and they will be done in a transparent way.
And that's a wrap of BizFocus. Thank you for watching. Good night and take care.